where are we in terms of inflation relative to the rest of the world?
So we were ahead of peer countries, and there's a lot of different countries that have a lot of different inflation and monetary systems and economies. But for a lot of our peer nations in Europe, which I think are a good benchmark, in general, European countries have had much weaker inflation because they've had weaker economies. And that's important to realize, is that not all inflation is bad, that a small amount is a sign that the economy is growing, that people are getting jobs, people are getting wage increases. The austerity that came after the great financial crisis and great recession in the 2010s meant that Europe was already behind and slower, but for bad reasons. Now, we've had a bigger pickup earlier than Europe. Europe has since caught up to us generally. That's a little bit more related to energy prices and specifically Russia's invasion of the Ukraine. So as your point earlier, a lot of inflation right now is in food prices and energy prices, notably the price of gas. Anyone who's been driving recently has noticed the price of gas has skyrocketed. And that's inflation in the sense that prices have gone up, but it's directly caused, or in large part caused, by Russia's invasion of Ukraine. And it's not derived from unemployment being too low or the economy being too healthy or, say, too hot in the way a car engine might be too hot. And that distinction, though, obviously, as you said, doesn't matter a lot for households that are trying to deal with these costs. It matters quite a bit for how the Federal Reserve and policymakers react, because if they want to slam on the brakes, and it's not because the engine's too hot, but because of this one specific problem, it's going to throw a lot of people in unemployment. It's going to slow the economy. It's going to slow down in the investments we need. And so that's, getting into this is really important. And, the cross-nation comparison is important because it shows that other countries are also dealing with unexpectedly high inflation for a variety of reasons.
Right, because there are competing stories as to what's driving inflation. And I mean, this is ultimately where your paper comes in. There are competing stories that drive inflation, which would indicate or end up prescribing different solutions. And people should understand that these different solutions are often political choices that we're making, because there you can have mechanisms that can impact inflation. And the question is, who's going to pay the price for that reining these things in? And the way that people avoid the political taint on these choices is to pretend that the causes are something other than they are, and therefore must be responded to. I don't mean to be so obtuse about this, and we can maybe get more into the specifics, but the argument that we will hear the right articulate, and people like even Manchin, I think, well, I don't know if that's a distinction without a difference, and folks like Larry Summers, they blame the benefits that were like the unemployment benefits, like maybe the subsidies to health insurance for the unemployed. Cobra was free for a while. There was a child tax credit that was given to people for a while. Two things I want you to comment on in terms of those things. One is, we needed to do that in a way that our peer countries did not, because they already do that, right? Like, we had to put extra money into the economy in places that it isn't usually there, and they didn't have to do that. So there was not the same differential. They already have a tax system that takes some of that stuff out of the excess out of their system. We don't. Because we don't do it on the higher end and provide these benefits on a regular basis, which is obviously, it shows that they have these sort of almost automatic stabilizers in these situations that we didn't have, that would inhibit their inflation growth. I want you to comment on that, and then also comment on the idea that we're 6 months out, 7 months out from the last of any of these benefits, as far as I can tell. how could they still be having this level of implication, of how could those specific payments be implicating inflation now? So those two questions.
Yeah, absolutely. So yeah, when you compare the cross-country comparison, we spent more. Notably, a lot of peer countries did not do a big stimulus in early 2021 like America did with the American Rescue Plan. A couple things that are different among peer countries. Yes, we pre-Russia's invasion of Ukraine, we had a little bit higher inflation, but they still had higher inflation than they had expected and had on trend. In exchange for that, but there's so many different comparisons. We're a much more auto-dependent country than a lot of European countries, and auto inflation hits our numbers a lot harder. The flip side is that our unemployment is significantly lower. Our unemployment rate is nearly 3.5%. It's basically where it was pre-pandemic. European unemployment is still 7-8%. They did a lot of support through the payroll system. Now, a lot of those countries have stronger unions, so that made it easier to prevent some abuses. Though, if you can imagine, if instead of us doing unemployment insurance in 2020 and 2021, just giving that money to employers, that could have been very abusive. Instead, we have quite the opposite. We had enhanced UI allowed people to pick and choose the jobs and pick and choose the terms of the reopening of the economy, allowed people to quit their jobs and look for jobs that are better for them. So we've had this huge upgrade in people's jobs. The wage growth, even real wage growth compensating for inflation, has skyrocketed among the bottom 20 to 40% of workers, which is just unheard of in the early parts of a recovery. There's been a big compression at the bottom half of the labor market, and I don't think that would have happened. I don't think that that real transformation and the opening for even more and bigger unionized labor transformations would have been possible. Europe might have had a little less inflation over the past year and a half, but now they're facing all this uncertainty going forward of Russia's invasion of Ukraine and others with a much weaker base where, we're confronting higher inflation than what we want. The Fed is right to normalize, but is moving a bit too fast and a bit too erratically. And it's important that they keep calm and data dependent. We have a lot of policy interventions from infrastructure investment, acts that have already passed, that could be passing, investments that we could be making. But we have a very strong labor market and very strong household balance sheet. So I think we come at this from this period of heightened uncertainty from a much stronger period, a much stronger position of strength than we would have otherwise. I think that's really important.
Okay, and so so if I hear you correctly, those benefits actually sort of set people up into better jobs in some fashion, and the increase in demand could be a function of that. Like, this could be a knock-on effect. I'm talking in terms of like its inflationary impact.
Yeah, so there's no evidence that wages are rising too fast and causing inflation. We know that the inflation we've seen has largely been recorded in corporate profits, and we can talk a little bit about that. That's where our paper at the Roosevelt Institute tries to intervene on. There was a big burst of wage growth last fall that I believe was the result of the collapsing of a lot of the more exploitative just-in-time labor markets. Now, you see a lot of service sector businesses have to offer $15 or $18 minimum wages, which is a big burst of one-time, wage increases. Right now, wages have slowed down. They're still very high, which is great. Inflation is still very high, which is bad. And so the net is not great for workers. But there's no evidence that wages are the cause of our inflation troubles in the short term here at all. And so I think a lot of criticism of that has been invoking that it could be a problem or it might be a problem someday, which I would not want to throw people out of work in order to prevent a problem that hasn't even happened yet. Make people poor to prevent people from possibly becoming poorer someday, I think is a really poor set of solutions when there's many other things we could be pursuing.